Hey everyone, welcome back to the Mark Loeffler Experience. We have Mikey Ulano on the show today. We're going to be talking all things stock market. Is it going to crash? Should you be fearful? Should you be greedy? What does Warren Buffett say about this? Let's get on to it. Welcome, Mike. Let's talk mother effing stock market. What's the stock market doing? Are we crashing? Are we going higher? Are we going to stay in a range? What's going to happen?
Everything's kind of up in the air again. It seems like over the past year, there's been moments where we have to rethink what's going on much more often than we maybe thought would happen, right? Everyone wants a nice, smooth market that kind of just goes up. And for most of 2020, other than the election, pretty much, after the COVID crash of 2020, it pretty much went up all year, right? And 2021 was very different, right? September got scary again. And recently now, we have all kinds of unanswered questions. And that's probably why you're asking me those questions you just asked me. So we're back into uncertain times in terms of there are many variables in place and we don't know what's going to happen.
And I mean, there's some indicators that I watch, like the fear greed index, right? And it's leaning towards fear right now. I can just pull up the one I'm looking at here on CNN Business. And I mean, we're at 59. So we're just over the fear greed index. So in my mind, that means this tells me we have some room to run.
Well, if you look at it, I mean, 59 is not even that low. It's still in the green section. And if you look at it from a month ago, people were probably getting, I don't know what the reason was. Maybe in December, people thought the debt ceiling limit wouldn't get raised in America or something. I'm not sure why they were.
Well, that was a lot of Omicron, right?
Omicron came out in the middle of December, though. That's saying, maybe.
I mean, we're the 11th, right? So
yeah, maybe.
This is when the market started going down in December, when everybody was expecting Santa Claus and the Grinch showed up.
Yeah, that wasn't good for the market. I mean, we almost could have seen it coming, too. I mean, a lot of health experts were warning about it, but when it actually happens and gets announced, that's when the market reacts. And
for sure,
we had a really bullish market leading up to that point. So,
well, it's so funny how it's going all over the place. So a week ago, it was 67, which is obviously higher on the greed scale. And then the previous close was 50.
Yeah, I mean, the thing is with this, too, with the fear versus greed index is that, I like to know what's going on with it. But I think there's also times where there'll be too much fear on this index and maybe you should be buying, or there's not enough fear on this index and you should be careful.
Well, that's how I play this. That's how I look at this. If people are really fearful, I'm buying. I buy when people are fearful and I sell when people are greedy.
If you buy right now, I think you're probably getting a reasonable price compared to where it was at a couple months ago for certain stocks, but you're not getting the best deal of the year, in my opinion, because this is not a crazy sell-off yet.
Yeah. Yeah. And I mean, we know that Buffett tells us we're significantly overvalued in the market, right?
Yeah, but you know what, though? He barely bought any stocks after the March crash of 2020. I mean,
I know.
He thinks the market's been overvalued for 2 years. So I don't, I'm not saying he's wrong, but what if his perspective is overvalued on a 10-year basis and you want something right now? That's a different thing. So
why? And he did sell off all his airlines right before they ran again.
Oh, and then he bought gold right when it was peaking. He bought part of a gold mine. So he
bought Barrick. Yeah,
he made some bad moves actually. He held too much cash because he felt that maybe this would get worse than it did, and he's thought the market. I know people that have been calling for a market crash for 2 years as well. Very smart, respectable people that I trust, but they've missed out on a lot because of that fear. So,
well, I mean, how many people have been waiting for a real estate crash to come, and they've missed out on all these gains, and hey, I can't get into the market now because I'm waiting for this crash and it's going to happen. I'm like, great, even if it goes down 20%, you're still not as low as it was when it started 2021.
Well, the thing is, though, here's the thing, though. So, I mean, I've never seen a real estate crash in Canada because I was I was 7 years old. I don't remember. A lot of people don't even remember. Okay.
I remember early 90s. I was starting high school back then. And I remember that. I know people bought it 1989 and they didn't get their house value back until early 2000s. And I'm like, oh, great. This is a great time for me to buy then.
Yeah.
So
I know someone whose parent was a realtor, and they told me that exact story. Someone bought at the peak, and somewhere around the year 2000, 2001, maybe they broke even. And
Yep.
but here's the thing, though. You're right to be more skeptical of the stock market because the stock market always drops, right? It didn't. It wasn't 1987, the last one, right? There was a bunch, and
I
so it's
mean,
right.
daily it can move a couple percent, right?
Right. So it's you're just to be fearful, but you might not be just to always be fearful. I mean, you have to manage that fear as well.
Maybe I'll just buy all the Bitcoin in the world.
You could do that. You could buy a Bitcoin shirt. You could buy some Bitcoin. I mean, again, no, right? You're buying something that's even more volatile, possibly than
I'm
good,
you know
right?
I'm just playing with you, right?
So
We're talking about stocks today. So
there you
all
go.
right, so let's why don't you bring up a chart of the market?
Yeah,
Let's do some drawing.
yeah. Let's do that. Let's go just check out the S&P here. So the SPX here, this is an S&P 500 index, and most people refer to the S&P 500 because it's the American stock market with the most companies in it. So if you're looking at it, often you're going to get a short-term chart like this, and you don't get too much detail out of it. But if you do a little bit of analysis, you can. You can see it's been really volatile. If you look at the movement here, it's extremely erratic, up and down and up and down. And that's kind of what I've been predicting. I do my weekly sessions on Sunday where I've been saying to people, hey, it's probably going to get turbulent here. And that's where we are at. This typically means that we're trying to figure out, are we going to break upwards or down from this short-term movement right now? This is just a short-term range. And if we back out a little bit, you'll see that prior to that, we were moving nice and consistently, right? That's way different than the choppiness that we've seen since then. And the reason
Well,
is
you see there's periods of those consolidation every once in a while, right? Like you see between September and October, there's that. It broke up. And
yeah.
then in December, same thing.
And remember, back here, they said, well, are they going to raise the debt ceiling? Are we going to have problems? Over here, they were asking that question along with Omicron. There's a lot, whenever there's uncertainty, you see those turbulent times, just like the election last year. But what happens is if you zoom out, so this is what I always teach people, here's your COVID crash back here. From then onwards, what has happened? That's kind of the way I'm putting my metrics on here. So if I get my lines out here, and you can kind of hook on to the top peak over here, drag it across, and then we can do the same thing on the bottom. You could see that we're actually moving within a range here, if you could see it there. I'm going to zoom in right now a little bit.
And if you guys have watched Mike's and I's other videos, we've talked about this a lot.
Yeah, now keep in mind that that range we were talking about at one point looked like this. So you got to be nimble. You got to call an audible like in football. You can't just say, well, it changed now, so you were wrong. Absolutely not. You have to adjust, right? And that's just part of the game. So when you're doing this now, what I want to point out is, again, before we were moving in a tight range like this, and we predicted, Mark, remember, at some point it's going to go up or down. Well, it went down. It went down right there. Okay, so it did break out of that range. It doesn't mean it crashed. It just means now we're in a wider range. Look at the width of this range. It's kind of going like this right now, and that's what I'm watching. Now, if I zoom in, you might say, well, you just drew a bunch of lines on there. How do I even know they're valid? Look at all the times we've touched, okay? On the bottom, we're touching, right, over and over and over. That's not an accident, folks. There's algorithms in place here that are tracking this. So I guess what my point is, we are in another one of those situations where are we going to go up or down from this range? Anything that happens in the range really doesn't matter until we break the range. That's the way I'm looking at this.
Well, and like you can play, oh, it's hit the bottom of the range. Time to make my bets. Oh, it's approaching the middle. I'm gonna watch it. Oh, okay, it passed through the middle. Get into the top of the range. I'm gonna get out of those bets.
Yeah, for sure. Like, and I mean, to try and predict exactly the moment it will break up or down from that range can be a little bit difficult, but you'll hear it in the news if something happens. And most other people don't analyze charts in a certain way. You might be able to have more conviction with your trade if you're using the charts appropriately when you're looking at this, right? Because a lot of people literally just listen to the news and Jim Cramer, and that's about it. And maybe a couple of things on the chart. I think the more detail you can provide yourself with on that chart, the more use there is and the more clarity, right? When you're making a decision.
Yeah. Well, that and I mean, you can make a lot of money playing that range.
You can.
Whether you're buying calls, selling puts, just buying stock, shorting the market, doing whatever, right? Like you can make a lot of money. Like
Yeah.
you can say, oh, it failed to break the top of that range. Okay, what's it been doing? Oh, it's been falling back down. And then you can short the market. You can buy puts on certain stocks because you know it's going to come down at least to the middle. And you can watch that. You can draw your line in the middle and say, okay, I'm going to watch my stuff and I'm going to put some stop losses in or whatever on those and then watch it come back down. And then it's like, okay, it's nearing the bottom. I'm going to get out of my position typically, or I'm going to put like tighter stop losses in. And then if it bounces up, I'm going to get out. Or if it breaks through, then I'm in a good position, right? Same thing as it's going up. I can sell my puts, or I can buy my calls, or buy my stocks, and I can make money.
And if you get really good at it too, like I mean, remember last year we were doing videos just like this when they were raiding Parliament Hill and we didn't get scared out of the market, right? Like it was one of those things where we knew that wasn't gonna break the market.
I think I bought Zoom calls that day.
Yeah, I'm pretty sure we made some trade. I mean, that was January. That was just January last year. So when we're looking at it right now, let's look at it this way. So it's at the bottom of that range I just showed you, right? What are the chances that it breaks down from that range for no reason at all? I would say 0. It's not going to happen just because. Okay. So can you give me a reason why that would happen? Okay, maybe COVID and Omicron. Omicron, everyone's saying it's not as harmful so far. We'll see in a few months, but the preliminary, right, that what we're hearing is that it might not be as scary. On top of that, America is open for business when they were shut down more last year at the same time. So what are the chances that the market's going to fall right now when we're in a better position than we were in last year, and the market rallied last year at this time? I don't know if I'm afraid of a full-on crash right now without something else obvious happening.
Yeah, no, I totally agree with you. Yeah, but I don't know. People won't click on this video if I don't put stock market crash. So we can have the best information in the world, but nobody's going to watch it unless they think it's about a stock market.
They want
crash.
Fireballs and devils and demons and all kinds of negativity, to click it. No kittens or puppies.
No, the news. That's the thing. The news is like condition people to only click on bad news.
Well, if you think about it, though, that's just kind of the human nature, right? It's more interesting maybe if there's an element of fear. And
well, I guess more people slow down for a car crash than for that nice Lamborghini.
Right? There you go. Right? Yeah. There you go. So, but like I said, the one thing I will say is I wouldn't invest blindly like we're perfect either. It's just that I don't see anything currently incredibly scary to me. But China could falter with Evergrande, and there's
there's the debt crisis there. Like that could be a impetus to take out the bottom of the market and get out of that range, and then it's again waiting to see what happens, see where it forms a new low. Maybe it's a new wider range, right? Because it broke out of a narrow range, it broke down out of that narrow range, but it's still it's now again making lower lows and higher highs.
It's really hard to bet against the market unless you're a short-term investor. I mean, like if you've been betting against the market for the past 2 years, you've been wrong. Unless you're a short-term investor, right? And you pick the right pockets of time to have done that. And that is quite difficult to do, especially if you have a full-time job and children and a family. It's very difficult to do. So I think you have to really, really decide what you're going to do, and if you're going to commit the time towards it. If you pick, the more difficult item, like picking little crashes in a bull market, that's a tricky thing to do. Yeah,
for sure. All right. Well, Mike, any other words of wisdom for everybody out here on the YouTube?
I would say basically, if you're getting scared out of investing, or if you've been scared out of investing over the past year or two, that's probably going to keep happening if that's what's been happening. You might want to maybe do a little extra research, maybe look into Mark's videos or the stuff I'm doing, and just realize that, just like Warren Buffett says, right? Buy when others are fearful and sell when they're greedy. If you can train yourself in that type of a mindset, I think you're going to be really rewarded for it long term.
Definitely. Patience in any market is one of the biggest keys to investor success.
And one of my favorite sayings is patience pays dividends as long as you pick good companies.
Yeah, 100%. All right, Mikey, thanks again for joining us. If you don't know, check out Invest Like Mike. Go onto his website. He runs some courses on chart analysis and how to play options. And yeah, and he also has a great Facebook page where he posts content daily. All right, everyone, thanks so much. We'll catch you next time.